Fahala, CEO of CEMIA, will be with me, and then we're going to jointly moderate this session because we have a lot of brain power here and I cannot handle it alone. So Sophie, maybe you can start, but before you do that, the reason of this conversation comes from the fact that everybody talks about governance and everybody talks about investment, and somehow these two conversations have not matched each other. And a lot of people think that governance is a boring topic, which it should not be. And there are people who think that investing is very cool, which is not always cool. So we try to make a sense of that today and look from the lens of really a balancing act of how we can actually make a difference with this conversation. Without further ado, Sophie, let's get started.
Thanks very much, Amir. Hello, everyone. Thanks very much for attending the session. So what we want to explore today with our fellow panelists is to explore how capital allocation is really a tool and is really a decisive force and lever in AI governance. So we want to go beyond the classical understanding of AI governance and the different tools that we have in our AI governance toolbox. So very classically, in the AI governance toolbox, you will have some soft governance tools. So here you can think about framework, guidelines around the ethical, trustworthy AI. And on the other end of the spectrum, you will have the more hard governance tools, such as laws, regulations, etc., etc. So we want to go beyond that understanding for the simple reason that the flow of capital at the end of the day will decide which AI system is built, will decide who will benefit from the AI systems. It will define how safety will be developed, how inclusion will be developed, how resilience is also prioritized. So we will draw on new investment data from a project that is going on and on which we have the latest news on the side of the Global Partnership on AI. We also hear from Mozilla Ventures and our different partners. And so the session will highlight the critical gaps in funding for safety infrastructure, foundational research, and the global majority innovation. And so I'm very happy to introduce our panelists for today. And so starting on my left, so to your left as well, we have Mohamed Nabe, managing partner at Mozilla Ventures, so a VC fund that invests in responsible technology and responsible AI. We also have Wan Sili, Director of AI and Data Innovation at Info Communications Media Development Authority, IMDA Singapore. Afterwards, we have Alpa Shah, Head of IEEE Standards, followed by Julien Billot, CEO of Scale AI, and Gabriela Ramos, co-chair of the Task Force on Inequalities and Social Financial Disclosure and former ADG UNESCO. So this is it to kind of kick off the panel. Amir, so I'll perhaps very quickly pass you back the ball to then dive into the discussion.
Thank you very much, Sophie. So you've seen the staggering numbers of investment in the past at least 2-3 years, but it started probably in about 6 years before, where AI investment has gone dramatically high. And today we see all the investments going from 6-digit to 7-digit to sometimes 8-digit investments. So how much of that investment really is done into trustworthy AI, and what investments are done for? And right now we're trying to dive into the questions about if we invest into models and data and safety and security, what are the trends of investment, and who's investing in that? Because really today we have very little data about the size of investment that is going toward what we call trustworthy AI. And there is some interesting data to dig in. So I'm going to ask first Mohamed about what we think about investments, what goes into models, how much money we put in models, how much money we put in data science, and so forth, and what the trends that you see in the market today.
Thank you, Amir and Stephanie. No, I think it's quite clear to everybody sitting here, understanding sort of the billions of dollars going into AI infrastructure, whether it's frontier model building, the data that powers it, the data centers that power it, and there's just such a scale of funding that's going into this. And when we sit back and look at it, it's really this sort of planetary scale, both of capital but also of change that's going on. And if you believe some of our billionaires, it's not even just planetary, it's going into outer space. And sort of looking at all this change, it's clear that governance lags behind. We're investing in the frontier, but we're not thinking about the governance. And we're not thinking about what the systemic risks might be to the technologies that we're building. And it almost feels like, in a way we've seen the story before, because we've seen the way the internet developed, and we can't imagine a life before our mobile phones and before the modern internet that we have, it, even though it's a 30-year phenomena. But when we think about AI and this rate of change, I don't think we've experienced this pace before. And it's clear when you hear the conversations that we're all having, regulations behind, and what we're trying to do. Thinking about governance is behind, and it's really capital that's deciding what's trustworthy and what's investable and what's at the frontier. And examining those capital flows lets us understand where this is. And with the competitive pressure we're seeing in the market amongst these frontier labs, it's clear that money's not going into trust. So this is why this is a really exciting conversation. And as somebody who's been investing in this sort of trustworthy ecosystem for a few years, it's something that we think is important, and excited to dig in with the panelists here and how we go and unlock the different areas in the capital stack.
So as you pointed out, the majority of the investment, I'm not talking about the budget, the investment goes into a handful of model development and very little safety tools today. So how can we understand that? How do you explain this difference? For instance, why do we not put more money into open source tools? And why the money is going only in a handful of models? Because in fact, when we talk about governance and regulation, really the budget and the investment talks for themselves. This is the real governance, right? You put the money into building something, and that money drives the innovation, pretty much. So how do you understand that? And then I'm going to ask the question to another panelist as well, but maybe you first.
Yeah, it's clear that we're sort of in this moment where there's a handful of companies, 4, 5, 6 of them that are building these frontier models, and there's a feeling that there'll be a shape shift in the economy that happens because of them. And that's why capital's flowing in the manner it's flowing. And we're seeing these funds being unlocked, and unlocked in ways which we often haven't seen before. It's not from the public markets, for example. Historically, a company the size of OpenAI or Anthropic would have been in the public market already. If you go back to the earlier generations of internet companies, whether it was Google or Amazon, they went public at a much earlier stage in their sort of lifetime and scale. So I think there's this competitive pressure that's happening on the commercial side. And people are rushing towards it, and they're not thinking about what the governance and risks might be, because everybody's releasing a new model in sort of months, right? And that's, there's always a new model being released. And on the other hand, I think there's certainly a national security issue driving this as well, where we're seeing countries trying to control this AI destiny. And you see this playing out between the US and China and other regions as well. And we've heard the discussions here about sovereign AI. So between these two competitive pressures, we're not seeing the money flow into either thinking about risks and thinking about trust into these systems, or thinking about what the open source tooling might be so we can ensure that everybody benefits from these technologies.
Thank you very much.
Thanks very much. And I'll actually just bounce back on what you mentioned, and also like all the challenges it represent to national security. And I kind of try to segue to the notion of standards. And I'm turning to Alpesh. And could you please expand a little bit and share a bit like your perspectives on what does it mean in terms of how should the capital be also focused on the development of standards?
Sure. No, I'm happy to answer that question. I think, when we're talking about capital allocation, it's as much an issue of liquidity as it is around the race for fixed assets. Mm-hmm. And at the same time, we're seeing the race for human capital as well, right? It's the combination of these elements, along with the points raised earlier of the sovereignty pushes and also the fear of, will I have a job, which has folks sort of jumping for that unicorn ticket as quickly as they can for the resources that they can secure to make an attempt. But as it was shared earlier, not everyone can get enough resources to even have a chance to do this. I think this is where, when we talk about this from an allocation perspective, and I'll use standardization from the sense of the tool of standardization. It's incredibly useful on a few fronts. The first is that as you're considering really many of these tools, many of these issues we're talking about, there's a level of public utility that also has to come into play. Again, not everyone can afford these tools, right? At the same time, on a panel yesterday, we touched on the need for incentives as well. And what you can imagine is that not only sort of national interest to see greater development of specific tools to enable greater scale, but I think you start to see greater number of alliances starting to come together that may be beyond just the geographical borders to allow for it. And in some of those cases, it may be for the reason of capital primarily to drive it. What we may see result along with this is the development of ecosystems where certain groups still take on more ownership of certain elements here. Whether it's the data element, whether it's developing the frameworks, and so on. I can share very pragmatically, we have an approach for AI ethics governance, our certified program. Use it as an example here because this tool is being utilized by several governments and companies as a mechanism to drive corporate value. At the same time, utilized as a capacity building tool to help push greater capacity development initiatives to see then more innovation occur. I'll leave it there.
Thanks very much, Alpesh. And I like what you mentioned on the importance of also supporting and developing the tools for capacity building, and also making sure that the different regions are empowered in that exercise. And what I found really interesting in different interventions here is that to support all of these exercises, it's not really the regulations that are needed to make that true. And perhaps I would want to do another step on that notion of the different capital allocation between regions, and what we could call a discrepancy or an asymmetry. Perhaps it's a best choice of a word between the global north, but also the global majority. So low, middle, and emerging economies. And so, once given the position in the regionally, I would love to hear your thoughts on what you saw and how you saw that Singapore in the past years and decades kind of tackled a strong positioning in terms of consolidating the strong position for Singapore in the region, and kind of tackling the challenge of that asymmetry.
Thanks, Sophie. Interesting question. Thanks for the question. Maybe I'll talk a little bit about two things. I think the first is how are we investing in supporting more use of AI, because at the end of the day, when you talk about capital allocation as AI governance, one aspect of it is how you're creating opportunities for people to be able to benefit from AI, right? And so there's a lot of what the government is doing today is putting government funding, public policy money, right, into supporting innovation. We're not talking about funding the big labs. It's really about funding startups who could actually build upon models or actually deliver value right to the users in terms of use cases, in or context, in the sectors, whether it's in education, in financial services, in healthcare, and so on. So we're doing quite a lot of that, funding both in terms of investing in these startups or providing some kind of grants or providing some kind of tax exemptions and so on, as well as creating the opportunities for them to come together to learn and to work together. Physical spaces, so we have this space called Lorong AI. We started with Lorong it's a Singaporean term for road, right? So an AI road, right? So it's a It's a space where we want the startup community to come together and learn from one another, and interact, and be able to build new products easily, right? And it's grown quite a bit, and we're going to actually create a larger space for this community very soon. So that's one way we can direct government funding to support startups. And this is the logical flow, right? Money goes to support startups. Startups innovate, create opportunities and jobs in the local economy, create good outcomes from their products and services to consumers. And that's where I think then you get this positive externality from startup investment. But maybe I'll just also bring the conversation to capital allocation, specifically in AI governance. So my work is in AI governance and safety, so I do policy in this space. So if you think about regulations, that would be something that I'll be working on. If you think about other types of levers besides regulations, and to drive a trustworthy or safe and reliable AI implementation within Singapore ecosystem, that's also the work that I'm doing. So we were thinking a little bit about how do we work with venture capitalists, how do we work with funders, so that they can drive their funding towards reliable and robust AI implementation, right? So you can do this in two ways. First, supporting the creation of strong third-party verification or testing companies, evaluation companies. I think that's one way we should start to create companies that can tool and implement and enable trustworthy AI implementation, right? So one of these such companies in Singapore is Rosaro. It's actually funded by our sovereign fund, Temasek. It's a subsidiary or startup that's funded through Temasek. And Rosaro actually is a third-party assurance provider, testing company. So that's one way you can help, right? By creating these companies, it actually enables AI governance and trustworthy AI. Then two, once you have these capabilities, then you can start providing that assurance, hopefully eventually some form of certification that actually demonstrates that a startup that's providing a product, a big tech AI model developer is delivering AI in a way that's reliable and safe. And through that assurance, then that are signals that can be given to hopefully venture capitalists and investors. Then to say, yes, this is a signal that I want before I put in more money. It still depends on the motivations of the investors, but ultimately, at least we're giving them data to decide how they want to direct the investment.
Thanks very much.
Thank you for that comment. We are focusing on the funding asymmetries, the lack of funding. Let me ask you a question here in the room. How many of you took a plane to be here in Delhi? It was a large majority of people. When you took the plane, did somebody tell you that the plane is not 100% safe? There is a chance that 5% chance that it falls? And if you had that basically note in your ticket, would you have taken the plane? So we're thinking about simple issues like this, but we don't think of AI as being safe. We use AI right now. We get excited about it, and definitely there is many potential, but we don't think about the consequences and safety of that. That's why we talk about safety, and the safety is part of the trustworthiness of AI, the reliability, and then unfortunately or fortunately, there is a growing trend on AI safety investment and support and standards, but not enough. So there is asymmetry. So we try to see this from different lenses. One is regional lens, but also is a global south, global north, but also is institutional differences. So I'd like to ask the questions to both Julien and Gabriela. Julien on the differences in terms of investment, and then to Gabriela and on the global stage, the difference between North and South and these investments, or this focus on safety and trustworthiness. So give us this perspective about why there is this asymmetry, why we don't have enough investment in safety. Today, Boeing or Airbus put probably as much equal weight on safety that on the rest of the engineering.
Well, you know, that's a tough question, and I think it's really linked to the capital allocation and markets. Markets are more rewarding today growth than safety. But I think that can really change, you know. If I Scale AI, I'm not the Scale AI in the US, we're Scale AI, we're a non-profit organization based in Canada. And our mission from the government of Canada is really to help companies adopt AI and create an AI industry in Canada. And I mean, creating trust is at the core of what we do, because if there's no trust, there's no AI adoption by people, and even not AI adoption by companies. Meaning, if you are a board member, if you don't trust the AI solution your own company is building, then obviously that's not going to happen. So building trust is absolutely critical in every investment decision, even at board level or any AI investment decision. So we really see that today, it's a bit like raising money on financial markets. When you raise money on financial markets, you need accountants giving a certification. You need to have certified accounting to raise money. We really think in AI, you will have the same issue at one point, meaning people will have to certify what your AI is doing is good, because if you don't have that certification, people will not invest in your company. We are not there yet, but a lot of stakeholders are raising questions about, okay, my company is going to invest in AI. Is it really safe? What kind of risk should I take as a stakeholder to accept this AI investment? So there's a raising pressure, I would say a really bottom-up raising pressure coming from stakeholders about AI investment in the corporate world, around boards, around directors, around all these people who want to be sure that the AI investment they are allowing are really safe, are we trustworthy? Because if they are not, there's a huge reputation risk for the company, and that ultimately can be a great protection for trust and safety in AI.
Maybe let me just get into not the AI, but the financial sector. Because it's not only that the financial sector is not financing safety at the scale it should, I think they will, because this is a high priority for G7 countries, and when G7 countries are interested in safety, they get the funds. What I'm thinking more is how do we get the flow of resources, not only to safety, but to fill the gaps in the global south to take advantage of these technologies. How do we fill the gap for the 30% of people that don't have access to internet that is stable? How do we fill the gap of skills? You see among the big tech how much they fight for skills. And then let's just think about what happened with the climate financing. It's not that the financial market without any incentive and without any rule and without any instruction from the government started flowing funds to finance climate mitigation and adaptation. It was the rules of the financial sector. It was the incentives. It was the government saying, you invest in fossil fuels, stranded assets. They introduce the regulations to diminish the investment in those areas. They put grants and subsidies to channel more funds to finance climate-related actions. And this is what we need. We need the incentives in the financial sector for the market actors to do it by themselves. And then they created all this 100 billion to finance adaptation in developing countries. So I feel this is the way to do it, through investments, through regulations, through the rules of the financial sector, and that's why I'm glad to be as co-chair of the task force for inequalities and social-related financial disclosure. Because if we don't put these rules for companies to have a better allocation of resources to different parts of the AI flow, it would not work. And it's not working because the rules are not there.
Thank you very much. That's a good comment. We need to dive also into the causes of why we're not doing that, because the mechanisms exist, right? We know incentives exist in the general economy and market. We know tax incentives and procurement. We're going to talk about that. But can we dive a little bit with everyone at the panel? What are the real causes that we are not able, right, to create those incentives and to basically strategically be aware of that? There is a global north and global south issue. There's different sizes of investment. But do we have any idea, any notion about why we have this lagging for now? Because the knowledge of safety exists. We know what the issue is, but why we're not able to invest more?
So, I mean, I'd start by saying there is some investment, right? Like it's not that there's no investment. We're seeing sort of a burgeoning ecosystem of entrepreneurs and founders and researchers working on these questions. And I think it's how do we get them to the next level, right? And what's that next level of capital that has to be there to unlock them? And there's a question in the back, which is, there's regulation, and we all expected the EU AI Act to sort of put a win behind all of these companies. It's not. So maybe regulation takes time because capital's flowing much faster than regulation right now. maybe it's a catastrophic risk. To go to your airplane example, when we see something on fire, it causes us to act. But we don't want to leave it to that, right? Like we want to do this before so we don't end up in the point where we have some catastrophe that we're responding to. We want to try to address it earlier on. So there's a part that's education in the market and education to investors. And as we think about the financial stack of people investing, we're investing at the early stage. We've invested in maybe 10 companies working on AI governance, a trustworthy AI at their core. Many of them running sessions here. Who are the limited partners who are funding the venture capitalists higher up the stack? Who are the sovereigns funding those limited partners? And as we go up the stack of capital flows, who are the people who need to be asking this question of how are we thinking about governance? How are we thinking about safety? Are we doing the risk assessments? Are we thinking about the downstream effects? And I don't think those questions are being asked, unfortunately. I think everybody's rushing to a future. And it's great. As a venture capitalist, we rush to the future. We don't know the answers, but we're funding entrepreneurs who are trying to explore that future. But I think further up the stack, people need to be asking this and pushing downstream.
Can I just add a comment as well? I think also further down the stack, the people need to be asking these questions. You just take an aviation example. How many of you will fly in an airline that has a poor safety record? You will? Oh, because it's cheaper? That's a poor safety record, yeah. I mean, so consumers actually potentially have a say in this to ask for certification, to ask for assurances, and then in turn, that may then drive certain behavior upstream. Then investors may then expect the same kind of assurances from the companies that they are investing in. Because at the end of the day, if you say, let the market decide, then the market will move away from organizations, hopefully with poor safety record. So that's one way to think about it.
Yeah. No, I really want to emphasize the role of this AI by design when you build, the safety by design when you build AI solutions. Because you have two approaches on this safety and trust. You have the top-down approach, regulation, exactly what happened on financial market or aviation, but you have also the bottom-up approach. We've seen in some companies, when you lose the culture of safety bottom-up, then you have issues despite regulation. So you need to build the top-down approach and the bottom-up approach. Meaning in the financial markets, what happened to investors when Enron crashed, then everybody saw the importance of more financial regulation and more culture of regulation into companies. AI will be the same. At one point, we'll have an issue, and then people will understand, stakeholders will understand they need to build and be more cautious about when they build the AI solution from a very bottom-up approach, and not just relying on regulation. So I think it's a combination of culture at the corporate level, culture on stakeholders to really be sure that AI is trustworthy when they build the solution, and of course, regulation and governmental approach to control that. So,
thank you. If I may just add, I think some of the elements we talk about end up becoming conflated quite quickly, but if you look at some of what's adding to the fear of capital allocation, liquidity into certain markets, is the lack of clarity whether the additional expenditure is worth the EPS, right, the earning per share. And when that isn't so obvious and you're working on a quarterly basis, your expectation is to meet your numbers. Your expectation is not to say, can I add on another expenditure, right? I mean, that's what the market is expecting you to do. Except if you are in a market where you can differentiate yourself by focusing on these elements. This is the element of capital allocation that we should really be thinking about if we want to push towards a more responsible future and a stronger future where a lot of what we talk about in terms of economic power and prowess really results in better well-being. I can't tell you the number of people that approached me just yesterday working at great companies that said, I'm afraid I'm going to lose my job. Now, I don't know about you, but from Management 101, if your employees are afraid and the exact thing that you got them working on is going to take away their job, I don't think you're going to realize those returns.
Thanks very much. Gabriela, you wanted to add?
Yes, just to say that I think that we don't need economists everywhere, but in this discussion we need economists. Because at the end it's a matter of incentives. And we forget that the governments have very powerful tools to change the incentives of the markets. The incentives now are just for profit making among the big tech. And that's it. Get to the market, scale it. Racing to the question of general AI, no? Super intelligent AI. And then the geopolitical context that is not helping. But governments have some tools. For example, just the public procurement. 15% of the budget of each country in the OECD, 12% in developing countries. If you go to the market to buy some of these programs to whatever reason, to support businesses, small businesses, or health, or whatever, and you put some conditions. You are a company that invests certain percentage on safety, I grant you the program or the project. Tax breaks, deductibility of investments on safety or development or infrastructure. I go for deducting from your tax receipts and you invest that money on safety. These things change the confirmation. So I really think we need to change the incentives for the market players.
Thanks.
So if we can add a question to that question.
Yeah,
for all of us here, what's the incentive at our individual level? Either in training or upskilling or as an entrepreneur? Because we talk about the incentive at the government level, at the large corporation level, but for all of us, is there an individual incentive? Once they mentioned that we have an opportunity to voice our concerns and ask for proof and conditions. That's one. But as we learn, as we use AI daily, do we have another responsibility to push towards more of this capital allocation towards these goals?
Sure. No, I mean, I think the consumer and the public at the end are the key stakeholders here, who we can't forget. You know, and often we talk about them in the abstract, but they're real and they're here. And you know, at Mozilla, we're a consumer internet company. We built the browser that was in the public interest, that balanced privacy and profit. So we've been doing this for 25 years, and we showed that you can build technology that puts people first, right? And that's not exploitative of people, that's not selling their data, and so on, and you can build a good business and one that has a brand that's trusted. And I think that's key in this discussion as well, that the consumers need to demand it. We need to, you know, be educated, and it's something that we need to push for. We can't accept a world where our memory and context and all these things that go along with AI are locked up in some proprietary company's algorithm, because these are things that fundamentally make us human in who we are. And you know, for me, it's really interesting to go back to sort of the conceit of what you asked in the start. You know, is capital what leads to AI governance? You know, can we invest in this? And I think the question really is, can we afford not to invest in it? Because right now, you know, there's potential systemic risks downstream as we deploy this technology in every part of our lives. And as consumers, we need to sort of be aware that right now it's kind of cheap to invest in AI governance because we're at the start of this journey in AI. It feels like we're a long way into this technology, but you know, it's still early. It's going to cost us much more if we try to address it later on. And if we wait for things to develop and evolve and be deployed and touch our critical systems, the cost of going in and building governance and building trust is going to be much more. So right now is the right time. It was better yesterday, better tomorrow than the week after.
Yeah. Also, I would like to emphasize also the role of board members and managers in that. Because at the end of the day, I was in the World Government Summit in Dubai 2 weeks ago, and the Prime Minister of Spain, Prime Minister Sanchez, said that now Spain will take legal responsibility for all owners of social networks that infringe the law. They will be personally and legally responsible, criminally responsible. And I'm not saying that's nice or bad. I'm just saying that if you do that, you give a much more pressure on managers, board members in all companies to really be accountable of what they do. And so, I mean, my point there is you need to work at different level, and manager and board stakeholders are also an important role. If you have them legally responsible of the consequence of what they accept, what they fund, that's also where you raise more pressure and have much more control about trust and AI safety.
Maybe just a very quick plus one to that. So we have a program in Singapore that actually educates board members about AI governance. just so that you do need people to be aware of what it is, so that they can ask for that in the board of their companies. Yeah.
Alpesh, you wanted to add on this?
Just building off of what's been shared. So I think there are certainly a few things at several different levels. Yeah, and we've discussed trust in many different ways. So I'll say, at the highest levels, when we're talking about both from allocation as well as a governance side and incentives, what we have found, at least through our 7,000 series work and our ethically aligned is work and the certification programs, is that part of it just begins simply by what you were just saying, which is the awareness of, right? I mean, in some ways, governance ends up taking on a feeling of something you have to do, right? If we look at the ESG's conversation, right? I have to do this, right? But there are some that say, we should do this. This conversation, though, is sort of taking on a much different light, right? Because there, it's sort of an understood. Here, we don't have to accept it yet, in some cases. And the value of the awareness, what we are seeing firsthand, is that it's then leading to now more intelligent questions of how do we address this? Is there a way to address these when, not just at the design stage, but if they're already out of the gate? How do we start thinking about it that way? So we have work going on right now around multi-agentic systems, working on problems with unknown bounds. And at the same time, the work reflected a little bit earlier around the certified program is looking around issues of transparency, accountability, et cetera. But the main point is realizing that you need an inclusive governing body. It needs to be iterative. It needs to be integrated into your statement of processes and procedures. And then the incentives have to support that. And if you take it even further, and this is the point raised around the consumer groups and getting involved, what has to change from a governance model, and I agree on the board makeup, is the boards also do get a great deal of advantage in having diverse actors from civil society sitting at those board tables now. And at the same time, creating independent assessors and auditors. While it's an additional cost, it is also something that provides tremendous value and allows for some earlier releases than not.
Thanks very much. And I'd actually would like to go back to something that Gabriela mentioned, which is the different tools that the government has to kind of focus the different capital investments. And Gabriela mentioned procurement as an example. So I would like for us to kind of take a step back and think a bit about what are the different buckets of investment that can accelerate the development of trustworthy AI and the priorities. So we mentioned procurement, there are also impact VC model, sovereign catalytic capital. So I would like to pick on the brain of all of you on the panel to explore a bit these different types of fund allocation. And on the question of government procurement, perhaps more specifically, I know that in Singapore you have a very interesting approach in terms of procurement. So perhaps a few words on this.
Well, first of all, we haven't had any requirements from government procurement with regards to air governance, so maybe that's a little bit later. I think the reason for that is because I think we do need to define what the standards are quite clearly. And it's a little bit uneven at this stage, maybe something that we could work with the IEEE on. Okay, but coming back to the procurement question, maybe I use an analogy of a program that we have, and perhaps then for AI governance to move into that space as well. So we have a program called the accreditation program, where we accredit startups for their products, right? So my colleagues in this program, what they do is they look at the product, make sure that it's secure, it does what it's meant to do. And I'm trying to get them to also look at AI, trustworthy AI governance, or at least AI safety as one element of that. They look at the company to make sure that the startup's still going to be around in a year's time, that it's made up properly of people who can actually execute and so on, and a few other things, right? Then they accredit. And this is what we do as a government agency. We put our brand and our name to a startup to say, this is a good startup. Its product is it's what it says it does, and it's going to be around. And that accreditation buys the startup what? One, it gets into government procurement very quickly. Why do the government, my fellow government colleagues buy from this startup? Because number one, they don't have to do a long procurement process, which for civil servants is a real pain. But it allows us green lane this process green lane the procurement process, so it's much faster to buy. And two, it de-risk it. So in the past, they might think, oh, I'm worried about this startup, I'd rather buy from a reputable agency or organization. But at least now, with IMDA sort of accredited stamp of approval, they can say, actually, I trust it, I can buy from it. Now, if you can then take this process and translate it into AI products, and we can then also put the same kind of accreditation on AI products, and how would that make it much easier for government agencies to procure? It's nothing to do with, I mean, one is, yes, make sure that it's safe and reliable, but it's also about making it just easier and reducing the friction so that it's much faster. So that's one way you can think of government procurement as a mechanism to drive certain behavior.
Excellent, thanks very much. Any other interventions, Mohammed?
Sure. I mean, I'm happy to talk about venture capital and specifically how we think about what we call impact venture capital. So, we have a double bottom line. So when we're making these investments into these companies, we're asking ourselves both, is this going to be a great business? But also, what principle is it advancing in the world? And is it advancing something that's net benefits for society? And we're looking at, things around trustworthiness in AI. How does it improve the lives of people? What specific problems is it going to solve? And often we'll see great businesses and we don't feel they're aligned with our principles and values, and we won't make an investment. So I think by balancing these two things, we're ensuring that we're finding those startups who have good governance and trustworthiness at the core of what they want to do. And I think this type of capital is really important because it makes sure, especially as we're thinking about a new field that's emerging, that we're finding people who want to build this field. They could easily go out and build different types of companies, but they see a problem that's in the public interest and they want to attack it and solve it.
I really think that you touched the nail in the head, because when investors, venture capital or any other kind of investors, the big funds send market signals that they will appreciate or that they will invest more in companies that do X, Y, or Z, you really move the markets. And I just wanted to say a very short comment, because when BlackRock came out 5 years ago, and they say, I'm not investing in companies that don't have 30% women in their boards, it was amazing, the rate of change of something that has been so slow for decades. So I feel that this is core to the whole transition to a more funding for these kind of issues.
Well, it seems that we are advancing the case that capital allocation could be a tool for governance, and probably a very powerful one. As the saying says, money talks. So if we're able to align our principles and provide guidelines and resources to do more of that, I think we can probably accelerate. Notwithstanding the tools and safety and protocols and standards, everything has to be around it. We're not saying otherwise, but I think as a disposition, we think that governance is slow, and we talk about closed doors about all those principles, et cetera. But it seems that in addition to that, which we need to continue doing and create alignment and everything else, probably we need to put more investment in general from private funds, public funds, sovereign funds, and ourselves into our own companies into probably promoting more trustworthiness in a domain or in a technology that is really changing everything, as you all know. This is not the typical technology that is around us. It's going to probably shift us in ways that we don't understand yet in terms of high-tech decision out of our hands. And this is something more critical than just safety. I think it's the safety of how we behave in society and how we evolve and how we learn. And this is an amazing opportunity. I think capital investment should also be thinking about that. Is that protecting all of us in a wake of a change that could be exceptionally good and important, but probably not completely understood, because right now we're focusing on, as Gabriel said, AGI and superintelligence, and we put all our eggs in one basket. but we don't put enough eggs in the basket of agency and people ownership of these capabilities in a way that is protecting them. And the example of the airline was one, but you wouldn't buy a medication if the medication said you have a 5% chance of dying. So there is an FDA, but even pharmaceuticals right now putting so much effort into, for instance, when you talk about, and those who know this topic in pharmacology research, there's a step which is toxicity, right, elimination, and that basically kills probably 80% of the drug candidates through just that phase. So a lot of investment goes into research, but then are eliminated because of the safety issues. So without thinking too much of that summary, I think what we learned today, and would like to ask the panel probably one last question, is that if you had today $1 billion or $5 billion, what would you invest that $1 billion first? Each one of you.
Who wants to start with the $1 billion question?
You can make it $5 billion.
I guess
or
I'm
10 billion.
starting. So one of the things, one of the companies we invested in, the founder Krishna Gad, is really somebody I admire who's been working on this problem for a long time. And during a discussion, he said something really interesting to me. He said, trust can't be left in a PDF, which means it's not a tick box exercise. It needs to be embedded in the runtime. And I thought when he said this, it was really wise because it sort of captured the idea that every part of our system needs to have trust built into it, every element. And as our systems are becoming multi-agent and becoming on-prem, on-device, everywhere we look, I think if we had $1 billion, we really can't allocate it to one thing. It needs to be up and down the stack, touching the edge, touching the cloud, touching wherever we're building the systems. And $1 billion is not enough for that.
So trustworthy by design.
I guess we're going down this lane. Oh, go ahead, please. Yes. Yesterday on this stage, I talked about the individual and the humans. So actually, I'll say I'll invest in the individual and the humans. Because I think that's where all the ideas are. And it's not just about investing in people to have the skills to be effective and to relevant in the AI economy, but also in investing in them to understand what is trustworthy AI, what is AI governance. Because then they are the ones who will then build this into systems and the products. They are the ones who will demand for this as consumers. So that's where I will put my $1 billion. Thanks.
So human capital.
Yeah, well, I've been president CEO of a publicly listed company, so something I would have loved to have at one point would be a certification mechanism. As a board member or as an audit committee member, I want to be sure that the company I'm in is doing the right thing. And I need somebody to tell me my company is doing the right thing. So I don't know if $1 billion is enough to create a certification mechanism for AI. We know it's very complex, but at the end of the day, I'm sure the successful companies will be able to put a label close to their name saying, I'm AI ready or I'm AI certified, and we need to build that. Whether with the private sector, the public sector, I don't know, but we need to build that kind of certification to give stakeholders comfort about what they're doing in AI.
So certification, working closely with standards then?
Maybe I would just copy my dear 1C. It seems that we always agree. But the fact is that if capital is scarce for the kind of things that we want in terms of the AI ecosystem, I feel that skills are also scarce. Not only in terms of what we see the big companies snatching their talents, but in terms of our people, investing in our people's skills, the skills of governments, the skills of workers that will need to transform their own capacities to take advantage of AI, the skills of school children that will need to understand better the world, and more than anything, skills of women. Because women are also not very well represented in this world, and I think that the whole outcomes are going to be as skewed as they are nowadays if we don't bring more women to the table.
And Alpesh?
So the three areas, it was 5 billion, you said, or 1 billion? Up to 10 billion, okay. The sky's the limit, I love it. So I think the first area is, and I'm going to build a little bit more off of what Mohammed and Gabriela were saying. Investing in the reframing of what success looks like at a market level. And in that accord, people, planet, profit sort of in that order, become a very critical aspect in terms of how we might want to think ahead. The second, I would say, is that a great deal of what's required to do many of the things we're talking about is based on the idea of fixed resources. There's not enough to go around, which means that we should be investing more in both the idea of public utilities and commons, as well as looking at what others have done and reusing, as opposed to trying to recreate. So partnerships is where I would also invest. And then finally, I would say from a third point, and Julian, we can talk about that certification program. I've got a procurement program for you too. And I got something for you, Mohammed and Gabrielle, as well afterwards. But very specifically, I think the third thing really is we need to invest in a campaign to very much raise up people's spirits. Because today, you know, we're here at the AI Impact Summit, right? And the impact people should not walk away from out of this conversation that we're having is fear. What we should be walking away with is hope, opportunity, and with all the youth in the room and intelligence, we have a much better chance of succeeding.
Thank you very much. It kind of closes perfectly. I think that we will look at optimism and look for the opportunities, and I think that we have the perfect task force on the stage to work on the different key topics that were discussed. Thank you very much to all. I know that we need to wrap up. Thanks, Amir, for the co-moderation, and have a lovely afternoon, everyone.
Yeah.